started early this morning when the Fed announced it would shake some credit loose that had been clinging to the side of the walls, and what a day on Wall Street that followed.
I happened to be watching at 9:30 just as the market opened. It was amazing to see the market jump in increments of 20s and 30s and 40s, and it went all the way up to 352, which is where it is settled now. We got about another 14 minutes before the market comes to a close, but I should mention the Dow is the least attractive indices right now. All the other indexes are up above that amount percentage-wise. So it is a good day for investors.
Yeah, those who are long the market certainly. In fact, they were so happy over the Fed's plan. And basically what that plan involved was making $200 billion available to troubled Wall Street banks. Not just giving it to them, but making it available. Instead of lending it overnight, they'd have 28 days to pay it back. The rally that followed, the big question is, will it continue? Our Fox panel back now, including Tracy Burns on the floor of the New York Stock Exchange. Tracy, we'll start with you. As we finish out the session, we were languishing a couple of hours ago up about 250 points, and now suddenly we're up more 100 points higher than that. What do you think is at work in the end of the session here as we get close to it that pushed it so high?
We were seeing real buying. That's what traders were saying. We're actually seeing money coming in. You know, this morning when we were up about 200, there was a concern that this might be a lot of short covering. Is this for real? Is it going to sustain? You know, that's actually something we were saying earlier in the day. And watching it, real money actually did come in. There's a lot of buy orders coming in, and it's not just people covering shorts. And I think that was something that everyone was waiting to see. I do have to say, though, the volume is still light. They would have liked to have seen us cross well over $2 billion, and we didn't. So it's not like a ton of money poured in, but it was good news, and it did hold. And quite frankly, we have to remember, too, we've been beaten down so much that even giving back this 350 points is nowhere near us giving it all back by any stretch. But nevertheless, it's a good sign. And Alan Valdez said it earlier, there's a good vibe down here, actually. And, you know, to Gary's point earlier, when the SEC chairman came out and said, you know, that he believes bear's liquid, whether or not he should intervene, it moved the market. And that's when we started popping back up, because we had pulled back a bit. And that was enough to turn us back up, and enough to convince people to get back in here for a little bit.
Terry, the market so wants momentum on the upside that it hangs on the slightest rumor. I mean, what happened with the Fed was much more than a rumor. It was a detailed plan involving central banks and other countries as well. But these rumors are propelling the market right now.
Yeah, I mean, mission accomplished for the day. The Fed wanted to breathe some life into these financial firms, which have been making new lows by the week, and it worked. But the question is, how long will it last? And you typically, when you have these types of situations, a recession, a bear market, a credit crisis, some big firms go under. A big bank goes under, a big Wall Street firm goes under. That's what happened in 1991. Drexel went under. Will it happen again? I don't know. They've staved it off.
Peter Schiff, Thornburg's pretty close, although today it's up more than 100%, still $1 and change. But there was a lot of talk about whether they could sustain their business operations.
Well, sure. But, what happened today in the market, every time we have one of these, the Fed is going to save us, relief rallies, they keep it, every time they say, oh, it's real buying this time. But yet, yesterday we were on the absolute lows for the move. And what the Federal Reserve is doing today, it makes me think of the history books, and they're borrowing a page from 18th century France. There was a currency called the assignat, which was backed by mortgages on church property. And eventually it led to hyperinflation, and the assignat became completely worthless. So what we need now is Austrian economics, not 18th century French
economics. Did you learn that at Berkeley?
I don't remember where I learned it, but I remember.
They teach that in econ, Gary Kay, at Berkeley.
Boy, I'm telling you, I don't know what the heck he's talking about, but okay. Look, let me just say a couple things, and we've done this a few times in the last few months during the bear market. First off, it's one day. It is a great day, and we'll take all we can. But just remember, in bear markets, your biggest days are in bear markets. The top 10 largest NASDAQ days were in 2000 to 03. So let's get more than one day. Let's get more confirmation that the worst is over. Keep in mind, the Dow just dropped 1,000 points in 8 days, so it was due to bounce. The Fed helped it to be a big bounce. I want to see more. I'm from Missouri. Show me.
Yeah, that's right.
All right. Well, Victoria, we don't. The big difference between France 200 years ago and the United States today is we got a pretty solid free market system right here in the United States. People out where you are in Silicon Valley are actually constructing things and building businesses based on what they are doing and inventing.
Oh, yeah. I spent last week at a conference in San Diego that was all about the future of technology. And let me tell you, entrepreneurs out here do not know the definition of recession. Of course, they're thinking long term. There's no shortage of innovation here. As for the stock market, you know, I agree with Gary. This is it's almost worrisome when you've got a bear market like this and we see a bump in such a short period of time. What you really got to see is corporate earnings, CEOs coming out with more optimistic predictions. And that hasn't been the case yet.
And Tracy Burns, the feel on the floor right now, if you could describe it in a word or two?
I mean, it's really, people are up, people are happy, but I do have to say, someone pointed out earlier that it cost $200 billion for a 300-point rally.
Great point.
How much does 367 points cost?
We'll be right back. Stay tuned.